And my response recently for that kind of stuff is I just block. I'm not really quick to block people typically, but somebody that their very first comment to me is just completely insane, well, they just get blocked. Sorry. But that's just going to be how it is. I'm not going to block most people, and I never have. My block list is very small on YouTube and on Twitter and everywhere. And it's good. I'm not going to block a lot of people. Probably 5 people a year max. But that's the new policy. If you come in and it's just completely shitty, like, you're just going to be gone. Unless you've been around for a while and I know you, and you might just have had a bad day or something. That's fine. I get that. I have bad days too. But in my link tree, obviously you see Speculate Freedom, you see my book and my Medium, my Trading View scripts. But I have this other channel here, and you can see the description's right there. It's kind of like Speculate Freedom, but it's for other topics. I get into all sorts of things. I even get into politics a little bit, which is probably more dangerous than FinTwit in terms of the anger level of people, which is potentially a problem. But I don't know, maybe I'll cut the politics out and just do other things. But just started that, and I've kind of enjoyed kind of doing it. And I think potentially, like, in terms of changing the world, because it's more broad, and especially in politics is messed up and stuff, but that is the one area where, like, I could really do a lot of good in the world with changing people's perspective and getting people to think a little bit more deeply, because people don't, on that particular topic, people don't think deeply at all. Or nobody looks at anything objectively in politics, it seems like. It's very, very bad. It's a very bad thing there. The other thing is, if I did go that route and do another channel and try to push that channel, there's less stigma if I was to eventually do like a Patreon or something like that. If I ever did a Patreon, I would put a limit on how much people give, and I would tell everybody to not give unless they have extra money. You should not ever give to any Patreon or anybody unless you have the means to do so if you're struggling. And in my case, I've met some of my medium financial goals, but I have some very large, bigger financial goals to meet that I'm confident I can meet that with just trading as my income. But having a second income of some sort, I have a few income streams, but they're all mostly pretty small other than trading. Trading's my big income by far. Having another income stream that's relatively decent sized, I think would help me as a trader, take some of the pressure off. So this is why, partially because I have a little bit more time now, and partially because it would help me potentially as a trader. And another thing is, I was watching a Brett Steenbarger video. I think it was an S&B Capital video, and I could not find the video. I looked everywhere for this video. If somebody knows where this video is at or what the link is, if you stumble across it, please let me know in the comments or somewhere about this video, because I wanted to show it to you guys because it kind of resonated with me. And basically what he said in this video is that he coaches a lot of traders, and a lot of these traders tell him that they think about markets all 24/7. They're obsessed with the markets. They're always thinking about the markets and trying to improve. And his comment was, get a life, basically. Get some other hobbies. Don't think about the market all the time. It's important to be interested, and to a degree, obsession is not bad, but you got to have some variety. And so that's part of the reason where I've been thinking about, if I'm going to push a YouTube channel, maybe instead of being a trading focused channel, it might be this other channel. Before I move on, the other thing I wanted to talk about, I do have a Twitch stream where I do gaming, and that's just a fun thing that I do on the side. It's nothing I take serious. And I know I'll never make money doing that because there's 1,000 nerdy kids on there, and I'm never going to beat them. But if you want to come hang out, some people have come in, and fair warning, I drink and I get a little wild sometimes. It's a lot different than what you see on this channel for sure at times. And I have a YouTube as well. These are just things for fun. I'm really not going to ever push that like aggressively and try to make money doing that. That's highly unlikely that I ever will. But gaming is one of my hobbies. Admittedly, I don't do it a whole lot anymore, but I like to play chess and I like to play MMOs mostly. I got addicted to World of Warcraft back in the day, and all my friends and family were playing it. We all played it, and I never completely moved away from those games, but I figured if I'm going to play them, I could just stream it, and it doesn't hurt anything to do that. And it's kind of enjoyable. I've kind of enjoyed doing it. So I stream that on Tuesday, Thursday, and Saturday is kind of my schedule, but I don't stick to it that well because things always come up. But it's 7 p.m. to 9 p.m. Central Time if you guys want to check that out. You don't have to. And like I said, I get a little wild in there, so you may not be prepared for it, but. What else was I going to talk about? Okay. So, what does it take to grow on YouTube? And I was saying you have to kind of sell your soul a little bit. Basically, this video here I ran across recently. I'd never actually heard of this channel before, but I kind of ran across this, watched it. Basically, he talks about attention spans are kind of dying because of TikTok and social media in general. And you see this on YouTube, you see this everywhere, where attention spans are absolutely dying. He shows some studies that have been done that kind of prove this out. And there's a few of them here that I also looked at and kind of read through a little bit. And these are ones that he talked about. And there's some decent evidence. There hasn't been a lot of studies done yet on this, but there's decent evidence that people's attention spans have plummeted compared to what they used to be. And I mean, you kind of see it. You kind of see it in the world. I know just talking to people, like I have I'm kind of long-winded, and just like talking to people, some of my friends and some of my colleagues, I'll get like halfway through a sentence and then get interrupted, and it's mostly my fault because I talk too long, but there's a lot of that. I've noticed more and more people that can't really listen. They just want to talk. They want to jump in like halfway through, and that's something I've noticed. I'm going to show you guys a couple channels that have achieved big time viewership and a lot of subscribers. They're kind of in the financial sector of YouTube. Let's show you guys exactly what it takes to get big on this platform, and it's to do stuff like this, clickbait titles, and we're gonna watch just a little bit of this. I have a hard time watching this guy because I don't find the content in any way useful. He is just playing up to the algorithm. The content's not completely horrible. I've seen worse, I suppose, but he's really using all the tricks to play up to the algorithm, and the YouTube algorithm itself has more or less created this attention deficit disorder that a lot of us have because people use these clickbait titles, people use all sorts of tricks to get people to watch longer, and let's just watch it.
You should buy the dip. Everything is cheaper today. The entire market is on sale.
See, like the zoom in and all the jump cuts constantly. Zooming in, jump cuts, really hyperbolic. Everything is hyperbolic. See that there's another jump cut. Constant zooms in, zooms out. Don't stay on one scene for too long. Back to him, zooming in. That's how you get big. Because the algorithm rewards watch time. The algorithm rewards people staying on your videos and not clicking away. Obviously, liking and commenting and subscribing. That's why they always ask you for that. That all boosts your ranking in the algorithm. There's another guy. This guy, Meet Kevin. It's another guy. And first of all, let me go back to this guy. I wanted to show you guys.
What's up, you guys?
Like, it's all over the place. How to get free food, 5 best credit cards, stop spending money, the new economic threat, a warning for all investors. And second of all, the timing of this is a little bit odd because a lot of investors are already in really bad shape, especially the ones that have been following him in last year when he was promoting all these scam cryptocurrencies and scam stocks. those guys are all in major hurt right now. And now they're going to what they're going to do is they're going to watch this video and they're all going to panic sell next week. And there's the probability of a low is getting fairly high. We'll get into that at the end, but I'm going to talk a little bit about the market. Now is probably not the time to sell, most likely, if you held through all this. Ideally, in your investment account, you should buy good companies and really hold them for like 10, 20 years. That's the way I do it. I used to kind of trade my investing accounts, and I don't like to do that. I just trade my trading account now, and I don't mess much with my investing account. I will raise some money here and there, but I tend to hold things very long term in there. But it's all over the place. Don't really know what the message is. Everything bubble was about to pop, but then right before that, the best cryptocurrency to buy in 2022. Like, what? What are you? It's just things that people will click, and it's all hyperbolic, and these crazy thumbnails that people click on because they look interesting. He's the master of it. Yeah, even this with the car. He mastered that, and it's kind of sad that that's what people gravitate towards, but that's what people gravitate towards. And this guy saying it's the same stuff. This guy was really like, I remember like I stumbled across his channel. It popped up in my recommended around March of last year, which was the top of a lot of these speculative companies, and he was promoting all of them hard, like the Palantirs and such. So that's interesting. There are a few good trading channels that have kind of made it, like this guy here. Probably makes a pretty good income with 189K subscribers, and it's good stuff. I've watched a lot of his videos, and he doesn't clickbait, and he does everything the right way. So it is possible for a trading channel to get big without doing a bunch of bullshit, basically. So it is possible that I could do it. The number one thing, and I've researched YouTube how to kind of grow, the number one thing is you got to put a lot of content out. And he's been pretty good at that, at putting out like a video a week most of the time. He has some breaks, but so I could do it. I potentially could run out of ideas after a while. I have tons of stuff. I made a list of all the things that I could make a video about, and it would take me a long time to run out of ideas. With being just narrowed down into the trading niche, that is also another thing. Like I could run out of things to talk about eventually. This is another guy. He's probably doing pretty good, and he does things for the most part pretty well from what I've seen. Not so hyperbolic and just talking about trading. And of course, he does trade Forex, and promote Forex, which I don't like Forex at all. I think it's a terrible market to trade. I think it's worse than crypto for retail to trade it because there's no transparency in Forex. There's no central order book like in ES and in the futures market. I don't like Forex at all. I'm not a Forex fan. For the most part, he seems like a pretty good guy, and I think he's doing things kind of the right way. And with 60K subscribers, he's probably making an okay income with it. Nothing spectacular. But so just talking about the reason I've told you guys all this is I want you to kind of give me some advice in the comments, what you guys think. And I know you're probably going to say continue on this channel, which I get. Just wanted to get some ideas on what you guys think. I think, honestly, I'm kind of leaning towards going over to OBJECTIVUM and pushing content there and seeing what I can do with that channel and continuing the pace on this channel, not abandoning this channel, but doing like 1 or 2 videos a month on this channel, a few things on Twitter, a few things on Medium here and there, and just go that route is kind of where I'm leaning, because I think it would be easier to grow that channel bigger and eventually put Patreon in place and make just a small extra little bit of income to help me achieve my goals and take some of the pressure off of trading. Some people won't like that. Some people think, like I said, the stigma that's out there, like if you try to get any income from any other source as a trader, you're a terrible person, apparently. So some people think that, and you can think that if you want. I don't care. I was going to talk about the market a little bit. Like I said a few videos back, the regime has officially changed. That was good because like I said, it's time to shift to shorter term trading, smaller size, and higher cash position. And that has been very nice for this kind of mini crash we're in right now. Last video I said I was scaling into the dip, which I did, and I ended up losing on that trade. But I've made some of it back with some other trades. And so far in this thing, I'm not really up money since we've pulled back from the highs. I was able to raise quite a bit of cash near the highs because of the correlations to SPX and VVIX and some of the other correlations that I used to raise quite a bit of cash this time, unlike the previous time where I messed it all up. So that was good. Overall trading's been okay. And in these environments, as somebody who's more on the long side typically and somebody that's more bullish typically, just surviving is the main thing, and not having any sort of major damage to the account, to me, is the biggest thing. I've been working on the day trading and shorter term trading, and that stuff is really picking up. I'm starting to get quite a bit better. I'm almost to the point where I would say I'm like maybe slightly above average as a day trader. And that's something I could do a video about too, like how I day trade. And for me, day trading, it's hard to craft huge edges in day trading, and I don't have huge edges. I think in day trading, you take small edges, you take a lot of trades, and that's how you let your edge play out. Really good day traders would probably disagree with me on that, but that's kind of my view. If the best edges were short term, then because of the opportunity cost, everybody's looking for short term edges, because if you can find a gigantic edge short term, and you obviously will get more opportunities to execute that edge intraday, then that's obviously kind of the holy grail, right? That's what a lot of traders want to find, is huge short-term edges because of the opportunity cost and how often you can execute that. What else did I want to talk about? Yeah, so lower cash has been helpful for me, or higher cash position has been helpful for me, and shorter term trading has been helpful for me. Do not discount the possibility of a crash here. I'm going to show you this Steve Depp tweet. Yeah, so Steve Depp, I really agree with this tweet. It's boom or bust usually when we have price action like this. And I would add in that we have high margin debt. We've had a lot of speculation and euphoria potentially. The boom aspect, the bust aspect is potentially a little bit higher right now of a probability than I like. I would not discount, I know it was only a couple years ago, but I would definitely not discount the possibility of a March repeat here. I'd love to see it because I'm heavy cash right now, and as long as I don't mess up too bad trying to buy the dip, which I probably will, but as long as I don't blow up too bad or lose too much of my account while that's going on, it would be a quick resolution to this thing, most likely, because I hate to say it, but the Fed would pivot. If that happened, they most likely would pivot, and we'd be back to QE, and most likely we'd wash people out extremely fast, get everybody out of leverage really fast, and it would set up another bull market again very quickly. But the probabilities of that are about as high as they've been since that time, for sure. And they're elevated because of the leverage that's in the system. There's just a lot of leverage with the options open interest, and with, even futures open interest is way higher. And obviously margin debt is way higher than historical averages. So I really agree with this tweet. However, I still lean towards we're setting up for a huge bounce. I'm trying to somehow get long for that. It's not easy, but I'm going to try to get long for that without hopefully taking any major slaps along the way. But unfortunately, when you're trying to basically catch falling knife, you can take some losses. But that's why you keep your position size small. And it's very helpful to have a small position size right now. And this basically, read this thread by Chris Sidiel from a couple days ago. It sums up my ideas as well, instead of having to do a full video about all these things. And I agree with most of what he says here. Just read this. This is kind of sums it up pretty well, what I'm thinking right now. Also, I would add in the credit spreads he talks about. Yield curve hasn't inverted yet. Most of the economic indicators, although there are a few that are not so healthy at all, especially the housing market is showing some pretty ugly stuff right now. And there's some other stuff. I don't want to get into all that because I've already been talking for quite a while. DIX has remained above 40, and in the COVID crash, we had a lot of prints that were like some of the lowest we'd ever seen. That's another reason, combined with credit spreads and combined with a lot of other things. Credit spreads during the COVID crash skyrocketed, and they're not doing that right now. So I don't think we're COVID crashing, but the odds are still elevated at 5, maybe even 10% of that, which is astronomically higher percentages of a crash. So I think fat tail risk is extremely high, especially when we broke 4,500, which was a level we tested many times. It's a multi-month support. Yes, we do have crash risk here and the margin debt was extremely high and it's been coming down. There's a lot more for the margin debt to go down. Options open interest, likely a lot of that short term. And we just had an expiration, so I don't know how much pressure that actually is continuing to put on the market. Probably not as much now, but we'll see. All that expired. Now people are going to take new positions. If the market opens gap down and it's down a lot Monday, people are going to buy more puts, and then you get that continuous self-reinforcement or that continuous reinforcement cycle with negative gamma. I mean, we do have a possibility of things like limit down and things like that. And before the first limit downs happened, back in the COVID crash, we were down quite a bit already, and I said limit down risk is pretty high on Twitter. And we had our first limit down pretty soon after that. So limit down risk is probably as high as it's been since then. And some of the highest maybe in history or certainly since I've been trading right now. So definitely be on your toes. Be like water. Be careful. This is a very dangerous environment. This is where people lose a lot of money. And you have to be careful. You have to have risk management. And like that interview I did this week with Horst, people don't have risk management. So many new traders the last 2 years, they don't have risk management. And many of them, I think, have probably already blown up. And there's probably a lot more that will probably blow up in the next couple of years. I think it's going to take time to resolve this. I think we're probably no longer in a bull market, like at least not a cyclical bull market. I still think we're in a secular bull market, most likely, barring some major changes in the economic data. But cyclical bear market that could last a year, maybe even two, like 15, 16, or maybe like a year like 2018, the last time we had the taper tantrum. I think that's kind of where we're at. I think it's very possible that we have a new high in place, that we won't see a new all-time high for a year or two. That is now very much on the table. But never, ever, ever discount the possibility of bulls to resurrect this thing and take it all the way back to the highs. It's still possible. Markets like this have a lot more randomness built in. So you have to expect anything, and you have to really, really be analyzing the data. You have to have your market dashboard in place. You have to constantly be reassessing this market. And you can't wait for somebody like me to put a video out or somebody else to tell you what to do. You have to be able to know what to do. If you don't know what to do, well, then you need to just go full cash and not try to trade. You shouldn't be trying to trade unless you can consistently beat the market. If you can't consistently beat the market, just go buy an index fund. Go buy an index fund and research and learn until you're confident you can beat the market consistently, because there's no reason to even do it unless you can beat the market. What else? I think that's it. Yeah, just in the comments, let me know what you guys think. It's a different format of a video this time. Just wanted to try something a little different. Let me know what you guys think. I'll be streaming probably tonight on Twitch if you guys want to hang out and watch me get a little weird. I'll see you there. Later, guys.